All right, I'd like to call the 7:02. I'd like to hear from Corey. Right on. I'd like to call the special audit meeting for June the 6th for the 23 to order. First order of business, call for pecuniary interest regarding the agenda. Seeing none, next go to the agenda. Are there any additions or deletions?
Special meeting, it really shouldn't be.
Yeah.
Shouldn't be, but just reading on the form. Thank you. Okay, can I get a motion to accept the agenda as is?
Sure, I'd be happy to move that.
Corey, all in favor? So we're here to deal with the 2022 fiscal audit and financial statements, and we have two representatives in person. Jeanette Adams, thank you very much, and John Vincent virtually. So welcome, John. Can you hear us?
Absolutely. Good evening, everybody.
Very good. So people, Cindy, if you want to take it from here, or turn it over to them, I'll leave it with you.
Over to them. Yeah, I'm just happy. So I'll just I think, John, you're going to talk to the audit results document, correct? And Jeanette's going to do the financial statement?
Yep, for sure. If everybody's comfortable with that. And again, thanks very much for the flexibility on allowing me to participate virtually during the pandemic. We got real good at virtual participation. So, but I'm glad that Jeanette's there with you in person. So just off the top, just wanted to say once again, thanks very much for the opportunity to be of service to the town. It's our great honor to act as the independent auditors for your organization. Just a quick reminder of the roles that each of us play in the audit process. So the preparation of the financial statements and the notes and reports thereon, those are the responsibility of management, and that always rests with your financial group and management. Our job is to audit those statements and reports, and then in our opinion, let you know whether or not that information as it's presented is materially correct. So to form that opinion, we do a bunch of different things. We look at your systems, we do some transactional testing, we have discussions with management, we undertake some analytical analysis, we do some statistical sampling, we talk to third parties that you're engaged with. And the balance of that work then turns into our assessment as to whether or not the information that sits before you tonight is in fact materially correct. We report our findings to town council to really assist you in signing off on your fiduciary duties to provide oversight over the financial affairs of the town itself. So this is a big part of the council's responsibility. And so we help you in terms of signing off on that fiduciary responsibility. Jeanette's going to take you, I think, first on a high walk through the financial statements themselves. And then if you're okay with it, Jeanette, I'll come back in with just the observations on the internal controls. So I will turn it over to Jeanette.
Okay, so then we're going to actually start with the financial statements, which we'll see from Thorsby financial statement. And I'll draw your attention to page 1, which is the management's responsibility for financial reporting. Actually, I'm going to just caveat this. I have a terrible cold, so today if I sound a little stuffy or I have to stop, I do apologize for that. So yeah, management's responsibility for financial reporting. So exactly what John had just said, that at the end of the day, these financial statements that are in front of you and the FER that we report to municipal affairs is management's responsibility. And so tomorrow or whenever council approves these financial statements, we'll get Donna to sign this on town letterhead and add that as part of the final package. The next page is our independent auditor's report, and as John mentioned, we do all of this testing to form an opinion, and in this case, our opinion is an unqualified opinion, meaning that, in our opinion, the financial statements present fairly in all material respects to the financial position of the town of Thorsby and its financial performance and cash flows for the year ended December 31st, 2022. We then talk about the basis for that opinion in accordance with Canadian generally accepted auditing standards. We have to then talk about the responsibilities that management and those charged with governance, being the council, have for the financial statements. And then on the next page goes into our auditor's responsibilities. At the end here too just for the public sector accounting standards. There's the debt limit regulations and the supplementary accounting principles and standard regulations that we also have to speak on. So then I'm going to take you to page 5, which is a statement of operations for the year December 31st, 2022. And I'm going to go kind of high level, point out a couple of things, and if anyone ever has any questions, please kind of just stop me and you can ask it. If it has to do with the audit, I'll most certainly be able to answer. If it has more to do with the actual numbers themselves, it probably would end up being a Cindy question. So if we start at the top under the revenues, we'll see that the net municipal taxes increased to $285,000 over last year. Sales and user charges also went up by $113,000. The government transfers for operating went up $112,000. That's mostly coming from the Leduc County funding. Franchise and concession contracts are up $18,000 over last year. The rentals are up $65,000, mostly having to do with kind of the rec center being back in full swing. We have penalties and costs on taxes and utilities were actually down this year at $29,000. Another one of note is interest. So interest rates are going up, therefore interest is up $33,000. So if we look year over year totals, we're just shy of up $600,000 from last year, and we're above budget by about $300,000 compared to what we were thinking when the budget was passed. So the total revenue being $3,300,000. If we go to expenses now, just a couple of things that I wanted to point your attention to is that under the legislation and administration, we saw quite large reductions in those two accounts. Parks and Rec, as we said, more is being done in the rec center, and that's why we see about $118,000 increase. But overall, most accounts are seeing reductions besides the rec center. And so then the total expenses are $2,830,000, which is pretty consistent year over year, but a lot less than what we were budgeting at $1 million. So then if we look, our surplus before all other items is $478,608, which is quite a significant increase from last year being a small deficit of $21,000, and a lot different than what we were estimating in the budget. Now we go to kind of all other items. This first one we'll have some discussion on later in some of the notes and schedules. But in 2020, the MSI capital grant was overstated in revenue, and we recognized this and found this out in this current year's audit. And because of that, we have to make an adjustment, and so that adjustment has to be removed from revenue, and it's being put to deferred revenue because that money has actually not been spent. So back in 2020, it was presented that it was spent, and then through third-party confirmation, we found out that it actually wasn't, and so we had to make that adjustment in this year. The government transfer for capital had budgeted to have $756,000. Last year had $260,000, and there was no actual capital transfer this year. Our amortization of tangible capital assets very similar year over year at $682,000, and then there's a small loss on sale from the street sweeper that was sold in the year. So then our total deficit now becomes $380,000, which is less than it was in the prior year at $456,000. Before I go on, does anyone have any questions on any of this? Then I'm actually going to take you back to page 4, which is the statement of financial position, which is really just a snapshot of where the town was on December 31st, 2022. So we are now 5 months past that already. But if we look at cash and cash equivalents, we're pretty similar year over year. The taxes and grants in place of taxes is similar, up about $35,000. The trades, grants, and other receivables, very similar year over year. Where we do see a large increase are the provincial government receivables and other local government receivables, that being the Leduc County funding. And so we see $365,000 in government receivable increase from last year. And we were kind of chatting about it prior, is to say that you have a lot of money due to you, so that management has done a good job and council has done a good job at kind of making sure expenses stayed low, so that when we see cash being similar year over year with a large increase in receivables, that's a good place to be. Total assets, financial assets for the year are $3,110,000. Now if we go to the liabilities, They're down over $200,000 for accounts payable and accrued liabilities, and this is mostly to do with the fact that as of December 31st, 2021, with the transition of the CFO CAO position, there were a lot of outstanding accounts payable at year end, whereas this year they're a bit closer to being paid on a more timely basis. We have a small amount of employee benefit obligation at year end. This year we have no source deductions payable at year end, and as I've kind of talked about the deferred revenue, you have government funding receivable due, you haven't spent yet, and we had to do that $170,000 adjustment. That's why we see this deferred revenue increasing by $530,000. The term debt is debenture that continues to be paid down at $2.5 million. So then our total liabilities are $4,152,000. So our net financial debt is just over $1 million, and it is being ground down compared to last year at $1.3 million. Now, when we look at non-financial assets, we have some prepaid, just small amounts that were paid ahead of when their expenses for the next year, $23,000 compared to $36,000. And our tangible capital assets are all the assets for the town, any additions, disposals, and the amortization that's affected on that. So then we have an accumulated surplus of $14,600,000. Any questions on this? So then if we go to page 6, this is a statement of changes in net financial debt. I'm not going to really talk too much about it, but what it is just looking at the surplus or the deficit for the year, and then we're adding back some of those non-financial assets to get to the final number of the net financial debt this year. The statement of cash flow is page 7.
Sorry, just one thing, amortization is, can you explain, like, it's a non-cash item?
Correct. So if you look at page 5, it's not in the budget because municipal affairs has the budget be on a cash basis, so that's why you don't see anything on it. But when you see our financial statements, you see $682,000. So it's a non-cash, it's just being depreciated over the useful life of the assets. And all the assets in the town have varying degrees, and we'll look at it in the notes of their useful life.
Thank you.
Yes. So then, page 7 is a statement of cash flow, and this is just showing the ins and outs of actual cash and where those are coming from in the year to get us to, at the end, the final cash balance at year end of $1,531,000. The rest of these schedules, so schedule 1 to 5 is more so the disclosures that we have to do to make municipal affairs happy. This first one is the changes in accumulated surplus, and the two kind of things that I wanted to show is internally restricted surplus. There were no transfers in the year, so council management didn't make any transfers to any of the accounts. And then the equity and tangible capital assets is really the value of all the town's capital assets at the end of the year. And then unrestricted surplus is really just kind of the remainder stuff when it comes to the deficit of the revenues over expenses. Schedule 2 goes into a bit more detail of these tangible capital assets. So we have to allocate them into the different accounts of land, building, engineered structures, machinery and equipment, and vehicles. In the year, the rec center saw quite a few additions under buildings of $34,000. That was the remodel of the upstairs, some lights, and some of that card access additions. Under machinery and equipment of $8,200 was a gas edger and a paint machine, both for the rec center. And then under vehicles, you'll see the disposal of the street sweeper. And so then below, we talk about kind of what the amortization in each of those accounts is for the year. We do the small amount of the reversal of amortization for that street sweeper. And at the bottom, the net book value, this is the final value, financial value, not necessarily market value, of land, building, engineered structures, the machinery and equipment, and the vehicles. Going to the next page, page 10. Schedule 3 is just a breakdown of the property taxes levied and the requisitions from the Alberta School Foundation, the Leduc Foundation, and designated industrial properties. Schedule 4, this is where we talk about both the transfers for operating and then transfers for capital. So in the year, we have the provincial government of $48,000, the local government being $427,000, which saw quite a large lift from last year at $180,000. And then the federal government is a small amount of $9,400. As mentioned, transfers for capital, there were none in the year, but we do have to make this $171,000 adjustment for prior year. So the total government transfers is $313,000. So Schedule 5 is the segmented information, which is really important when it comes to the financial information reporting that we do to municipal affairs. This year, I'm sure you know that we switched from QuickBooks back to Great Plains in its entirety for all of the financial transactions in the year. It was a huge undertaking for Cindy, and it was also a large undertaking for us. So last year, we created these financial statements, and we really had to almost start from scratch again, re-inputting all of the accounts into the different functions and objects that they had to be. So a labor of love that for years to come will be beneficial. And so in this, we really the new chart of accounts will make allocations much easier in the years to come and a more accurate allocation, whereas last year there was a lot of kind of best guesses or kind of looking back to prior years, whereas this year is very accurate with what the information is showing here. So again, we go by the different functions. This is set out by MA. They're general government, protective services, transportation, environmental, public health and welfare, planning and development, and recreation. And then we have to kind of slice it for the different types of revenue, the different types of expenses. And then at the bottom, the very bottom line, you can kind of see the net revenue or loss for each function for the town of Thorsby. Now getting into the no disclosure. So this is part of what we have to do to present financial statements, is we have certain no disclosures that we have to report. The accounting policies go through every type of account and the policy that the town has. There were no changes in the year, so I'm not really going to go into any of it in detail. So that's page 12 and page 13, as well as page 14. So then on page 15, we talk about the taxes and grants in place of tax receivable, where we allocate the difference between current taxes and grants in place of taxes, as well as any arrears taxes. And we can see that that arrears number is going up year over year, about $40,000 more than it was last year. Accounts payable and accrued liabilities, we also have to disclose the different amounts that make up that final balance of $200,000. Trades payable were down about $80,000 from last year. We do not have that settlement payable from last year that was put onto the books at year end. And our accrued debentures interest, very similar year over year, and our accrued liabilities saw a small lift of about $10,000. The deferred revenue, so that $1.3 million that we saw in the statement of financial position, what that makes up is the Canada Community Building Fund, which was formerly the gas tax fund, of $404,000, up a bit from $343,000 last year. We have the MSI capital grant this year of $758,000 from last year of $449,000. So receiving more of this MSI funds, but not spending it at that same rate. Then there's the new Alberta Municipal Water and Wastewater Partnership of $165,000, and still a small amount of the AHS Communities Initiative grants that hasn't been spent yet, or $2,800, sorry. The term debt, as I said, was the tax-supported debentures at $2.5 million, still outstanding as a liability, and then we speak to some of the future years' principal and interest payments that will be coming up. The interest rates this year were 1.86% to 3.97% per annum, and maturity occurs in any of the periods from 2020 through to 2039. The debenture debt is issued on the credit and security of the town of Thorsby. In the year, there was $84,000 of interest expense in the year. Last year had $93,000. The credit facility, there is a revolving line of credit with a limit of $1 million, but as of December 31st, 2022 and 2021, there was nothing outstanding as of year end. So the contingencies, the town is a member of the Alberta Municipal Insurance Exchange. Under the terms of membership, the town could become liable for its proportionate share of any claim losses in excess of the funds held by that exchange. Any liability incurred would be accounted for as a current transaction in the year those losses are determined. And in the prior year, we also speak to the 2021 provisions recognized of $136,000 for settlement claims after year end. Franchise and concession contracts, we just show the breakdown of Fortis versus ATCO. $188,000 for Fortis, up a little bit from last year at $184,000, versus ATCO Gas had $78,000 this year, up about $15,000 at $63,000 last year. We have to speak to the asset retirement obligations as well as the debt limits. So the Municipal Government Act requires debt and debt limits to be defined by Alberta Regulations 255-00 for the town of Thorsby to be disclosed as this, and so how they ask us to disclose it is how we do. And they have to talk about certain debt limits, and the town is all within the proper amount. The equity and tangible capital asset is really just the total value of the tangible capital assets, less the accumulated amortization over the entire useful life of all those assets, less the long-term debt, which is used to purchase capital assets, to be $13,070,000. The accumulated surplus, so these are all the different capital reserve and operating reserve accounts. So really all I wanted to show you is the unrestricted surplus saw a net change of about $11,000. You'll see no changes of any of the capital reserves, no changes under any of the operating reserves, and the equity and tangible capital asset is only the change over the additions, disposal, and amortization in the year. In that Schedule 5, that big schedule that we worked on is the segmented disclosure. Sorry, we're on page 19 now. And this is required, and so we did that through Schedule 15. Contractual obligations, the only one that we noted is that you're still in terms with EMJ Environmental Consulting up until October 15th, 2023, with annual cost of $175,000. We then also have to disclose salary and benefits for individuals in this current year as well as anyone in the prior year, and so those numbers can be found here on page.
There's a few errors there, like under Mayor Darrell, the total is like 3,500.
About last year?
2021.
Oh, okay.
So his total would be 15,286.
Oh,
And
yes, for 21, okay.
21
Yeah,
plus 3, yeah.
yeah, I was looking at the across the line, so I was like, well, that doesn't add up.
That was a test, Corey.
All right, perfect.
Please take a look, and if you do see anything. And then the LATP, we just go through the different service contributions to LATP, their rates. The current service contributions were $33,000, very similar year over year. And the total current service contributions by employees of the town were $29,000, very similar year over year of $30,000. We have to speak about the financial instruments and any risks that there are. Related party transactions, like we said before, it's okay to have business with any related parties of council. We just have to disclose them. So last year, 2021, from the former mayor, there was still $2,800 of contract services, and then this year there was a small amount of $225,000 for one of the companies owned by a councillor. Last year was $5,900. Budget figures this year for both the budget and bylaws, property tax bylaws, were approved on May 24th, 2022. This prior year adjustments for transfers of capital, as I was saying a few times, during this year, during our audit, it was determined through third-party representation that the MSI 2020 capital revenue was overstated by $171,000. The adjustment was made in the current year and recorded to deferred revenue, as this revenue has not been spent as of December 31st, 2022. Comparative figures, because we had a change in our chart of accounts, there were some adjustments that we made, so total numbers didn't change, but maybe we allocated it into different accounts for some of the comparative figures. And then this can be updated, but approval of financial statements, that date, June 6th, will be updated to whatever the date is that council approves financial statements. Are there any questions at this time?
Just one, so how far down is the town right now that isn't supported by the assets and income?
So the net financial debt is $1 million, sorry, I'm just gonna pull it up, $1,042,088. And it was $1,321,000 last year, so trending in the right direction.
It's certainly a mouthful of information and a mind full of information to provide, but the kind of the summary from our side of things that I wanted to make sure that everybody took away from Jeanette's presentation is that, you know, the town had a solid financial year. You reduced your net asset deficit. You've got good liquidity, so you're managing your cash flow properly. You've been systematically paying down your net debt, so that's a big green check mark in terms of the activities of the town. And then the big thing, of course, is that you're meeting your obligations on a timely manner. So, you know, no concerns with regards to dealing with the ongoing obligations of the town and paying your bills on time. So those are the big picture takeaways that we would want to make sure that everybody has.
All right, thank you. Thanks, Jeanette. Go ahead, John, if you please. And with the audit result.
Again, the audit results document is the other document that you have with you and in front of you. And so again, it's our report to town council members in terms of the audit process. Again, it's a bit of a wordy document, but I'll give you the highlights on it. Just on page 2, just a reminder again that we will issue an unqualified audit opinion. So that's the best green check mark you can get from your auditors. And so that is the case here on this year's financial statements. On page 3, we'll just remind everybody that we had no significant unadjusted audit differences. And so that's an important consideration to make sure that you're aware. So all of the adjustments that we talked about through the auditing process have now been reflected in the financial statements themselves. Jeanette mentioned that the accounting policies are all disclosed at length in note 1 of the statements, and that's just a reminder at the bottom of this page that that's the case. On page 4 of the report, we wanted to be sure that you're aware that there were no significant or unusual transactions recorded by the town or any significant accounting policy differences that arose during the work on the audit this year. So that's again, a good check mark. At the bottom of the page where we make a reference to material weaknesses and internal controls, there are no material weaknesses in internal controls, but we do have some observations for management and for the council around things that could be improved. So no concerns from a materiality perspective, no material internal control weaknesses, absolutely no disagreements with management, great cooperation from that side of things. On page 5, we talk a little bit about any serious difficulties. Again, everybody around the table is aware that there was some substantial delays in terms of getting the audit initiated. That gives us a little bit of heartburn in terms of planning for staffing and planning for timing. But at the end of the day, we were able to work through that late start and wanted to make sure that there was a collective shout out to Cindy for her hard efforts in getting us through the audit and getting to you tonight. Big part of what we do is we are always looking for any evidence of fraud or illegal acts. And so we're happy to report that during the audit process, we found none and were not made aware of any fraud or illegal acts that arose during this fiscal year. We do, however, have to pause and make sure that we take the representation from town council members as to whether or not anybody else is aware of any fraud or illegal acts that we should have been made aware of. And so maybe I'll just pause there and ask that question. Anybody aware of anything that we should know? I see a collective no, so that's terrific. Independence is the cornerstone of the work that we do. So we remind you at the beginning of the engagement, at the end of the engagement, that we are independent of the town and that we remain completely independent for the purposes of performing the audits. So nobody's related, nobody's working for, nobody's married to, and we do not do anything else for the town other than the audit work that we perform annually for it. On the next page, second question that I have to ask of everybody around the table is whether or not there's any subsequent events. So did anything happen that you're aware of since December 31st, 2022 up until today's date that would have a material impact on the financial numbers from last year as presented? We did not, and we're not aware of anything. And again, I see a collective, nobody is raising their hands. Related parties, Jeanette's already talked about. So then we'll get to these non-material internal controls, which are articulated on page 7. So some of these things have been around for a bit. And we, of course, encourage management and financial oversight individuals to make sure that they're aware that these are going on and to try and make sure we get them addressed in the coming year. So 4 points for consideration. The first one has to do with GST and just our inability to be able to get reasonable assurance over the current and prior periods balances. And that's because there's been some challenges with regards to the makings of the actual filings and solidifying those positions. Management's aware, they are working on it, and we hope that this will be resolved before next year's audit. Second point just is with regards to timing. Again, as we articulated earlier, late to the dance this year, but able to get successfully onto the dance floor, get through the night, and successfully off the dance floor with regards to the audit. The third point is one that I would make sure that you are paying attention to. That is the timely completion of bank reconciliations and the oversight over your bank reconciliations. Certainly when you're busy and you're coming from behind and you're making changes in accounting systems, bank reconciliations may not be done on as timely a basis as you would like, and certainly as we would like. That reconciliation process is always a flagging of anything that could be a muck or a miss in your banking. And so we do encourage you to try and create and implement that monthly bank reconciliation exercise. And the last one on page 8 is a bit of a historical consideration. You'll notice that on Schedule 2 to the financial statements, all of the information about the capital asset register is all there and summarized at a high level. What the town doesn't have is the details. And the town's been around for decades, for a long time. And so, of course, there's some historical considerations to how that information is gathered, reported, carried forward. And so what we would love to see is the town actually get to the point where it has a asset by asset detailed register that would then roll up until to the summary schedules. Right now, we're only working with summary schedules and current year's activities. But if that opportunity is there to be able to build it all the way up on an asset by asset basis, that would be ideal. So, as management's response is noted here, you didn't start with a complete capital asset register, and there is a journey to be able to get to a place where you have one. Every year when you count your assets, dispose of things, add things, your list gets better because of the details that you're adding to it. But we would hope that there would be a journey that sees you get a listing of everything and a complete detailed register going forward. So again, not material. This is all work in progress, pretty standard fare for every audit that we do, that there is going to be some things that we would certainly encourage folks to look into, to consider, keep it top of mind, and to try and improve. Happy to answer any questions on any of those observations.
Anybody have any questions?
Yeah, I haven't actually saw any of this until
this minute.
until now. I mean, if we have questions, I'm assuming we can contact you guys and clarify.
Make mention of that. Cindy's on there. I'll have our email addresses, and so to pass that around, and if anyone had any questions, or our phone number too, to get on the phone and have those discussions.
Yeah, like I said, off the top of my head, there's nothing pressing, but yeah.
Of course.
Yeah, they were literally finalized this afternoon.
Yeah, but it makes it hard to have questions, in advance, right? So.
Definitely.
Yeah, we only come and see you a couple of times a year, but we're on the job all year round. So you can certainly reach out with any questions about anything throughout the year.
Excellent, thank you.
So, John, can I ask one question here, and I guess I could have asked it of Jeanette as well. So when you look at the amortization, and then you look at we're a deficit, we're not actually in a deficit if you put the amortization in there or take it out. Is that a fair statement?
So if you look at page 5.
Yeah, that's what I'm looking at.
Mayor Hankin, what you're saying is kind of the surplus before the items being 478,000 as a positive, but then when we did all of those kind of other items, we're down to a loss of 380,000. So if you're looking at a cash basis, you would be correct to
Okay,
say that.
that's, I guess. So, I mean, we didn't have to take anything out of reserves. We don't put anything in reserves. Is that a fair
From a cash
statement?
perspective, up that
Okay, all right, thank you.
Sorry, 478,000.
Okay. Anybody have anything else? Cindy, would you like to say anything? I want to thank you for doing this, for sure.
Yeah, I just want to thank Jeanette and Michael for their patience and their hard work when it was all done. Because it was a challenge to get the trial balances to work and then get all the bank recs done and all that stuff done at the 11th hour, and there was a lot of hours put in. So, so thank you. I truly appreciate it. And I am looking forward to next year when it's 100 times better. Oh, we said last year, we said next year will be better, and the year after that will be amazing. So yeah, next year will be, because everything is in GP now, and it's all carried forward, and it's all good.
Since December, have we made any progress with the CRA access?
No, they actually called today
Okay.
and left me a message, so I will call them back tomorrow. But they asked for Christine. See, that's the problem.
Yeah,
Is that the
they're asking for
authorized
2 people
person
ago, yeah.
is nobody here. So I have to figure out how we go about changing that.
Christine is still in the area and I'm sure, yeah, she would be.
Yeah, and we can
Able to,
contact
yeah.
her, but I'm just gonna get CRA's opinion on how to do it, because it has to happen.
Yeah,
Because
but I
the
guess you need-
municipality
yeah,
is constantly
Yeah, the
changing.
simple solution is her talking to them to say, no, I don't work here, and that, you know,
Yeah.
you need access. I mean, she is in the area, she is popular, I know she would.
So I will call them tomorrow, because they did leave me a message today.
Could you patch her in and do a conference call?
Yeah, but I wanna find out first what the
Yeah, before
process
you,
is,
yeah.
because there is CRA is not easy to deal with.
Just
They
call
require,
it.
Yeah.
they require a lot of documentation to do little things. So I want to phone them, find out what the process is, and then, I mean, their strikes didn't help either, right? They were on strike for,
Yeah.
what,
I would also say, like, that the town should have some kind of process internally as well, of like, what does that look like, who has the authorization,
Yeah.
and when and if that person
Leaves.
leaves, then what does that
Yeah.
do, right? So the next group isn't in the same
right,
place
vote.
10 to 15 years from now.
So,
right?
because I know Tamara had online access, because I can tell.
Yes, I'm very confident
Yeah,
that.
so, but I mean, Christine was
staying.
here, so probably gave it to her, and then with Tamara leaving, the way it happened, there was nothing. So we just have to get that access, and it could take a bit, but I will get, as fast as we can, and then I can get all of that done. It's been on my list of things to do, but it's been a little busy. So, but yeah,
All right.
One thing, well, the interest rates that keep getting bounced up, that are out of your control. For our debt that we have there, like our taxes already, mine went up anyway, $200 again this year. Is there a contingency for that, or is it like for our debt costs every year? You said it was going up, I forget how many thousand.
oh no, it's going down. Our interest rates are locked in, they're not changing.
Well, the debt is, I mean,
Yeah.
sorry, your interest rates are locked in?
For the debt?
Yeah.
Yeah.
The line of
Interest
credit
on
flucts,
money.
doesn't it?
Okay.
The line of credit
Yeah, the line of
fluctuates,
credits, yeah.
And I was
floating.
thinking to the interest that the cash in the banks is accruing.
Yeah.
The interest rate that the banks have is
Oh,
going up,
offsetting.
so you're making more money in interest income, is what I was seeing.
Yeah, that's what I was wondering, if it's offsetting it, or because the central bank there keeps on,
Yeah, but our debentures are at a locked-in rate for the entire time.
okay.
Yeah.
And then we get taxes all at the same time, so we have a big lump sum of money sitting there for a long period, so interest rates going up is actually probably good for us.
It's good for us, yeah.
It is.
Yeah. Because we were making at one point last year near the end, like $5,000 or $6,000 a month on interest.
And I think we've got one debenture coming off this year, if I'm not mistaken.
Yeah, one small one, yeah.
That helps. Helps.
Yeah, the rec one.
Any other questions? All right, I believe we need 2 more. First motion we need is to approve the 2022 audit financial statements. If somebody would like to.
I would suggest that we delay that until everyone's had a chance to actually review it in case there is questions. So, I mean, I just got it, I wouldn't be comfortable approving it until I've had a chance to actually sit down and make sure I have no questions.
What's the feeling about anybody else?
I feel confident that Jeanette and Cindy have both done a good job. I don't know that I could find mistakes in here to recognize them.
Oh, I agree. I didn't see anything superficially that was glaringly problematic. I can't say I've actually reviewed it because I haven't, right? So.
If we don't do it today, we can't do it at the town meeting, but we can do it at the end of it, have a special meeting at the end maybe.
We can attach a special to the end of how you, if you're not.
Yeah, because otherwise we have to do it at the end of the month, and that may be,
We're already kind of behind for
Yeah.
there.
Well, I mean, it's a 2-minute meeting at that point. I mean,
Correct.
if you want to just do it in a day or two from now,
correct, so that would give us, that would give everybody a week, and then is that,
Sure.
everybody okay with that?
That's fine. Like I say, if we need to do it sooner, that's fine. I mean, we can, any night someone wants, if we need to do it sooner.
Okay, do we need a motion for that?
We do, sir, please.
Okay, motion would be to delay.
So, yeah, I move to defer until a subsequent special meeting, following the Cal meeting, next Tuesday.
Great. Okay, thank you for that, Corey, all in favor? Okay, that's carried.
Yeah, I'm sure it's all fine.
Yeah, I agree, I mean.
It's totally fair.
Yeah, I have no issue with that.
I'm not offended.
Yeah, fair enough. Yeah, I didn't want me to think of like, oh, there's something like, there's nothing I saw that was problematic, but I actually didn't see much because it's been.
I mean,
Yeah,
all the
we're
credit to
fine.
you guys to get it, I mean, you guys had to really go hard to get it where it is right now and not making excuses, but that's why nobody had a chance.
And I realize, like I say,
I think it's.
having a little time to look at it, I just
I would say
appreciate
too,
it.
not even for like if we're saying like, oh, there's something wrong, but if you have questions, I want
Yes.
council to
Yep.
approve it, being like, I'm comfortable with it, I understand
Yes.
it in its entirety,
Absolutely.
that's exactly what you are here.
Perfect.
We've made provision for special at the end of council.
Okay,
Perfect.
all right, very good, well, we've already voted that, so I guess, next, all we have left is a motion to adjourn. John? All in favor? Carried, and thank you very much,
Thank you,
John,
John.
I really appreciate your comments in there, and, we'll see you next year.
Yeah, one of the things I wouldn't mind letting you all know is, you talk about good transition and process. So as you're saying goodnight to Jeanette tonight, you can congratulate her for being made a full partner in our firm effective January 1st. But yeah, we very much appreciate the opportunity to serve, and thanks for giving me the chance to do this remotely tonight. That helped on the family front for sure. So.
Well, thank you very much.
Thank you. Bye, John.
Good night.
So what does that mean?